I want to break some of this down into their segments because as we look at their fine dining segment, that saw a 2.1% drop in comparable sales in the quarter. We're seeing Capital Grille, Ruth Chris Steakhouse, that consumers are trading down, in fact, to even lower priced alcohol compared to last year, according to their CFO. How much of a focus then, given how much of an investment they've made on the fine dining in the past year, how concerned should we be about that aspect?
Yeah, so it is a little concerning what we're seeing in terms of the behavior of the consumer. So within fine dining and those consumers earning 125,000 or more per year, you saw a substantial move to lower priced alcohol or less alcohol, just trading down within the menu, trying to save a little bit of money. Keep in mind, though, that I think we've heard this several times that last year was there was a lot more people just going out to eat, more fine dining sales. They were up maybe 120, 117% above pre-COVID levels. And so they're starting to kind of come down to more in line with pre-COVID levels right now in terms of fine dining. But we're also starting to see within their core brands, Olive Garden and Longhorn, some of that kind of trade down within the menu as well, to save a few bucks among consumers. So I think that was one of the themes that we heard from this call this morning was that, some consumers being a little bit more selective, a little bit more on the higher end, a little bit less so on the lower end.
I want to ask you, because when you consider food inflation, I mean, Darden added 77 Ruth Chris Steakhouse restaurants during the quarter. But when you look at things like not just food inflation on things like beef, you also have higher wages, a lot of these companies having to pay more. And some of these companies are passing those on by including the gratuities in the check, making it even tougher for the consumer. How risky is this to keep taking on these restaurants and expanding when the consumer continues to be squeezed?
Yeah, look, I think as you see it everywhere in consumer, prices are going higher or have been going higher. I think we'll see that moderate as we go forward. So pricing this quarter was 6%. Total inflation was 3%. So it was actually double. But that's not typically what Darden does. Typically, Darden has less pricing than inflation, and they eat some of that inflation. So I think what you're going to see going forward is that pricing is going to moderate significantly. Hopefully we get the same on commodities and labor as well. But keep in mind, labor inflation is still running around 6%. I don't know that we're going to really see a lot of moderation on that line. So restaurants are still taking some price to try and offset that. But, the commodities are definitely more in flux at this point.